Hello, YouTube. How are you? My name is Mike, coming to you from Health and Wealth. You've tuned in today because the title is something along the lines of which one's better, QDTE or XDTE? So that's what we're going to go over in this video today. By the way, happy Friday. Hopefully, you made it through your week and you're ready for the weekend. It's a long weekend here in Canada, probably in the US as well. So for here, we call it Labor Day weekend. So I'm all done doing the labor, cut the lawn already, and ready to sit back and relax. We got a big old rainstorm, 100% chance it's going to happen here tonight. So very excited to kind of buckle down here and watch some YouTube tonight. So thanks for tuning in. Let's get into it. Before we dive too deep, I just wanted to say thank you very much to all of you. I wanted to show you guys some of my stats here. I'm a new channel. I've been around for, well, I mean, technically I've been around since December, but I took a break. Now I'm back. And so I've been around for about 35 days. And you can see here 455 subscribers in the last 28 days. So if you're one of those people, thank you very much for that. I appreciate it. We're also just over 2,000 hours of content viewed in the last 28 days. So I'm getting really close to my initial goal here of 1,000 subscribers and 4,000 of 4,000 hours of watch time. So if you're one of those people that are loyal to the channel, much appreciated. I won't waste any more of your time if you're not one of those people. And let's get right into it here. Let's talk about the two ETFs in question, QDTE and XDTE, everyone's favorite hot topic of the month here. So I've gone ahead, I've created a couple spreadsheets for you here in Excel. And if you want to take a look at each of those videos, I'll put them both at the end of this one. I did a deeper dive talking about all of the distributions that I've paid out so far. Also, all of the money they have paid out so far and where you're at with your initial investment. So I'll put one up right now. I'll put the QDTE up top right now. And then I'll put them both on at the end there for your viewing pleasure. So what I've done is I've taken a look at both and kind of examined which one I think I want to dip my toes into. And I'll tell you my strategy, my plan that I'm going to go about right after I'm done kind of going over these stats with you here. So two new recent dividends or distributions were just paid out today or yesterday. And so for QDTE, it had a bigger distribution. And if you're not aware, these two ETFs, their sole goal is to pay out every single week, weekly distribution, which is kind of a new thing out there in the world. And people are hyped about it. Now, don't let me tell you what to do. You do your own research and make up your own mind if this is a good thing for you. There's a lot of volatility here. There's a lot of risk in share depreciation potential. So there are some negatives to this for sure. Also, you would have to have a pretty good chunk of capital to be able to make money. Well, to make a lot of money, let's say, right? You need a large capital share to be able to do that. So I'm going to break down those numbers with you right now. So the latest distribution was 31 cents, and I'm only talking about QDTE right now. We'll go to XDTE after, okay? So 31 cents. And in my scenario here, I had $10,000, just fake made up money here. And originally that gave me 215 shares. And my original share price was $46.44. So I've been dripping, again, make-believe world here, dripping dividend, reinvesting these right back into the fund. No taking that money for myself, just trying to compound that interest, make a large snowball big enough that I can roll it down a hill, get on it, and ride it all the way to Mexico. So for retirement. Okay. Anybody else? Costa Rica? Where do you want to retire to? So that 215 shares every single week paid out a dividend from March 7th all the way, or actually March 26th. March 7th was when the fund came out. March 26th was the first payment, but every single week it paid out. We took that money, we reinvested it. We saved some as cash. If we didn't have enough to reinvest it, you can see all of that my math right there. And then we went all the way down to the bottom here, and we've done pretty well for ourselves. So the last distribution was 31 cents here yesterday. Was the X date, should have been paid out today. But yeah, $77.81. Not too bad for a weekly income. And what I did is I took, let me just scroll over here for you. I took that 77.81, um, added it to last week's leftover distribution, and it bought us 2 extra shares with $9.12 left over. I'll do the same thing again next week. We're going to just see how this snowball, how long it takes for you to be able to use those funds and be able to do what you want with them. So now, next week, we have 253 shares. So we're going to multiply that by whatever the distribution is next week. And then we're going to add it to that $9.12. And we're going to see how many shares it can buy me next week. So the snowball, let me go back here, is getting bigger. And you can see here in column G that we're starting to buy more shares every single week. It took, from March until today to be able to get to this level. And once you start automatically being able to buy 3, 4, 5, 6, you're gonna start to fly. And I'm talking shares, right? So as soon as you get to that 10 shares a week, you're doing pretty well for yourself. I know for me, that would be really incredible at the level of investing that I'm at right now. I think that would be a really great thing. 10 shares a week would be really good. But you guys let us know in the comments. I know we have a lot of people that like commenting and kind of telling us what you have, how many shares you have. Are you using drip? Are you taking the cash? Are you putting it somewhere else? What are you doing with your strategy? Let us know. So far, if you had have let it drip, it would have been $1,674.38 in a total distribution of $7.33 times the amount of shares that you had. So it's doing pretty well. It's doing what they said it was going to do. So what I did is I put all of these numbers, and again, I just want to make sure you guys know it's hypothetical here, but I put all these numbers together. I'm going to make this a little bit bigger for you so you can see it. And I'm just going to kind of expand that out. There we go. So fund inception, March 7th, 2024. 46.44 was the initial price. $10,000 down gave you 215 shares. With drip, you purchased 36 more shares after 5 months. We're coming up on 6 months. So your original $10,000 plus your new $1674.38 reinvested, for a total of, is that math pan out? I'll put it up there after. You know what? I'm not too sure if that's 15%. I think it's, yeah, I don't think it's 15%. I don't know if I changed that one or not. My bad. But I'll flash a little graphic up here to let you know what the percentage is so far. So your now new total investment is $11,674 because you've reinvested your money back in. You haven't taken any of that money. So you've repurchased shares with that. So today you now have 251 shares. Today's price was $42.25. So that equals actually $10,689.25. So the investment up $689 or 6.9%. So doing okay over the last 5 months. Now, this is also taking into the thought process that the share price has gone down $4. And what's the math on that? 21? Yeah, I think around that $4.21 over that 6 months. So, not great, right? And now this feeds off the Nasdaq 100, and so very tech driven. And so, when the economy goes up, it goes up. When the economy goes down, it goes down. But it's doing okay. It's doing okay. 6%. I mean, hold on one second. Let me rewind. 6% in 5 months is pretty darn good. But you probably could have found somewhere else to invest that would have made you more. But it's not bad. It's definitely not bad. So if you just took the dividends and didn't reinvest them, you would have $1,579.95 in realized gains because you've taken that. Now, You've got tax on top of that, of course. And I'm not a tax person. I know here in Canada, 15% would have been taken from me if this was in my TFSA. It also says, oh, there's the math. You would have been down $4.19 in share price or unrealized loss of $900.85. So up 675.10 without drip, or up 689.25 with drip. So it pays to have drip, right? So that's $689 you didn't have before. You have it today. Congratulations. Well, technically you don't have it still, right? Because you haven't sold these shares and you're dripping. You're trying to build that snowball. All right, let's take a look at XDTE. Before I do, I want to just kind of finish off. I got all of my information from Roundhill's website, and I'll link Roundhill's website below. When I got there, I went to Top Holdings, and then I went to let's see here, Roundhill. Give me 1 second. Actually, I'll show you guys where I went to. Roundhill Investments. Get rid of this. Boom. Okay, here we go. So when I went there, I went to income, and then I found all of these sitting right here. Okay, so I'll just kind of move this over for you so you can see it. There's XDT and QDTE right on Roundhill's website. So I'll link Roundhill's website below if you want to, investigate some other ones that they have. But for now, we'll move on from this section. Okay, so let's talk about XDTE. Give me a moment here. I'll get that set up for you. There we go. And XDTE is trading covered call strategy on the S&P 500. Warren Buffett says the S&P 500 is where you should park your money. Warren Buffett's fund just passed the $1 trillion mark yesterday. Warren Buffett just turned 94 years old today. Happy birthday. Maybe yesterday. Depending on your watching this, maybe 2 days ago. Happy birthday, Warren Buffett. But he says, just put your money in the S&P 500 if you're not an advanced trader or somebody that has a ton of knowledge of the stock market. So let's talk about XDTE. Had a recent distribution yesterday. Let's take a gander here of 26 cents. I saw out there in the world of Twitter or X, people weren't super happy with the 26 cents, as it was quite the reduction, as you can see from the months before. 39, or the months before, weeks before, 39, 39, 41. There's a 35, right? So quite a bit lower than the previous 4 distributions. So people weren't super impressed with that. But I did the same strategy here, $10,000 down, gave you 190 shares to start with. You can see that in column B, 190 shares. There we go. And I did drip. I dripped it all the way through, every single week, all the way up until today. And so with this 26-cent distribution, 210 shares times 26, and I'm just going to show you the math over here. Bought you was $54.60. So that 54.60 plus 12.08 from last week bought me 1 share with $14.70 left over for next week, and now gives me a rolling share of 211, which is pretty decent, starting from 190 all the way up to 211 for doing nothing. Not too bad. We'll do the same thing next week. We'll see how much the distribution is. Isn't it fun being able to get a distribution every week instead of every month? I think that's a pretty awesome thing for sure. All right, let's go take a look at the stuff I have written up here. I'm just gonna kind of cut this, and I'm gonna bring it up one, so it's just easier to look at. So XDTE came out at the same time, March 7th, 52.46, so a higher initial price. I mean, it is trading calls on the S&P 500. So $10,000 gave you less shares than QDTE, so 190. With DRIP, you've purchased 21 shares after that 5 months, almost 6. Your original $10,000 plus your 1107 is reinvested. So you're up 11%. Total investment of $11,107.53. So now you're at 220 or 211 shares times your today's price, which is $52.31 the last time I looked at it, $11,037.41. And so that means your original investment's up $1,037 or just over 10%. So pretty darn good after 5+ months. So if you just took your dividends and didn't reinvest them, you have $1,045 in realized gain. Of course, again, minus your taxes. But you'd be down a whopping 15 cents per share, which, if anybody here is a yield max investor, you catch my sarcasm. The NAV erosion appears to be very little with XDTE, which means that the price of the shares aren't coming down as much and you're still getting paid your distribution. Pretty good. So down 15 cents or $28.50. So line 162 there, you're up $1,017 without drip, 10%, and you're up $1,078 with drip, just a little more than 10%. And I included shared depreciation there, minus the $28.50 off each of those totals. My last line down there, SPX, was $5,157 on March 7th, and it was at $56.16 on August 26th. So with $10,000, I could only buy one share because I don't have fractional shares. And so I would have been up $459. The other half, it was like $4,500. Had to go somewhere else. Who knows if that would be up or down. So let's take a look. Let's go take a look at both of these side by side, just so you can kind of have an idea. I've got them all kind of just copy and pasted down here. So I don't know. You guys tell me which one has a better performance so far. I think people really like QDTE because it pays more every single month and it's cheaper to buy initially. But in my opinion, and it's just my opinion, all right? So take it for a grain of salt. I think so far this XDTE has been a better investment because you have virtually no share depreciation so far, and you're still getting paid every single week. Mind you, it's a little bit less. But if you look at the overall gains with QDTE, your investment is up, what is it, 6%? And over at XDTE in the same exact time period, you're up 10%. So it's beating it by 4%. So for me, I have a plan. All right. So I have a plan. What I'm going to do is I'm going to take 10% times 2. So 20% of my yield max dividends from Nvidia, from Misty. I'm going to put 10% into each of these funds every single month. And what I would like to do is create a wheel type of a purchase here. What I would like to do is get enough dividends and distributions from these two bad boys, QDTE and XDTE, and then recycle them back into yield max. Every time I get a yield max, put them into these two 20%, and then make that wheel happen of these 4 ETFs. So if you watch any of my prior videos, you know that my goal is to create 6 pillars of income. And I think these two right here can really help me with those pillars, and they could help propel it a little bit quicker than I'm doing right now, especially with that wheel type strategy. What do you guys think about that strategy? Are you doing anything similar to that? What do you think about these ETFs? What is enticing you to purchase them? What's kind of getting you to sell out of them? Tell us in the comments down below. But that's going to be just about it for me. Stay tuned. I have one blooper. It's not really that much of a blooper, but it's just me testing my equipment. If you want to see that, make it happen. But I hope you guys have a great weekend. Remember to hit that subscribe, that like button, and we'll talk to you soon. Bye for now. This is a test. Hello, testing the microphone. Welcome to YouTube. Hello, YouTube. My name is Mike. How are you doing? Happy Friday. Long weekend ahead of us. See you then.